And now he joins us for his 2025 predictions. You know, 2 years in a row is good to be right, Dan. You're bound to be wrong one of these days, but I don't know when that'll be.
Yeah, look, I mean, I think as me and you have talked and we've talked on the show, this is just the beginning. I mean, I think this is ultimately going to be another 2-3 year bull market for tech because it's a fourth industrial revolution that's playing out in front of us. And that's going to be big tech and the multiplier. And I think it's only 10 p.m. in the AI party that goes to 4 a.m.
Dan Ives, a tech analyst from Wedbush Securities, predicts a strong future for the tech sector, especially driven by AI, which he sees as the start of a new fourth industrial revolution. He believes the Nasdaq could reach 25,000 by 2025, with tech stocks potentially rising 25% in the next year. Ives forecasts AI capital expenditures will surpass $1 trillion by 2025, with a significant multiplier effect driving growth across the tech industry. Ives also expects that the AI revolution will impact both enterprise and consumer markets, benefiting companies like Meta, Tesla, and Apple. He anticipates that Apple could reach a $4 trillion market cap by 2025, and Tesla could reach $2 trillion, driven by advancements in AI and autonomous driving. Despite some short-term pauses, he believes the tech sector will continue its strong performance over the next few years.
So you believe that there's an inflection point for the quantum trade coming up, and I thought this was interesting. You're saying it's Nvidia's earnings are an inflection point for this trade. Why are they so closely connected?
Yeah, I think, well, you know, it takes semiconductors to power a lot of these applications, right? And they kind of, AI and quantum computing work in tandem. So AI is kind of, you know, the brain and gives you the results, but quantum computing has to work on the data. It has to essentially process the data, you know, scour out all of the errors and produce a good product so that these AI models can run efficiently. And I think, you know, once NVIDIA earnings came out and you see kind of like the growth and progress in AI and machine learning, what was behind that was also Jensen Huang's talks about quantum computing. And it was the first time, you know, prior to Google Willow, that really came into the market with like a big broad base, you know, top tech company, top semiconductor company in the market. And so I think it just shone some light on quantum computing. And then, you know, IBM obviously coming behind it with their Eagle Quantum and Willow, just because Alphabet's so well known, really propelled this forward.
Let's talk about those partnerships. How important are they when it comes to stealing some of the market share and some of the business from NVIDIA?
Well, Frank, it may seem incredibly difficult for any company to compete with the likes of Nvidia, but how about two companies? That's what OpenAI, Meta, Amazon, among others are doing. They're betting on that by partnering with Broadcom. Each of these companies are in the process of building their own in-house chips that they hope will one day rival Nvidia. Even Apple, Frank, is reportedly working with Broadcom to design a cutting-edge chip that will be used to power AI capabilities expected to be released in 2026. That's according to a report from The Information. It's a significant move as all the hyperscalers remain heavily dependent on NVIDIA's powerful GPUs to run AI models, driving NVIDIA's sales and, of course, its soaring stock price. But analysts say high prices remain a sticking point for technology companies that buy NVIDIA's chips. That's accelerating interest in developing an alternative. However, we know it's not easy to do that, and NVIDIA has the first mover advantage, plus what Wall Street sees as the best group of engineers and talent to keep innovating and producing faster and more powerful chips beyond Blackwell. Tonight, when Broadcom reports, investors will want CEO Hock Tan to provide a much-needed update on its progress in working with some of the biggest names in Silicon Valley and when an NVIDIA competitor could really hit the market, Frank.
All right, now speaking of semiconductors, my next guest warns that their exposure to China is pretty bad considering the potential tariff war coming up. I want to bring in IO Fund, their lead tech analyst, Beth Kindig. And Beth, you know, you put some great charts in your report underscoring just the threat to specific computer chip names. Is this one of the reasons why the chip, we're sharing them on the screen right now, you've got Lam Research, you've got ASML, KLAC. Is this one of the reasons you think that we've seen so much pressure in semis in just over the last few weeks?
Hi, Charles. That's a great question, considering we have AI leaders such as NVIDIA taking up all of the attention. Semiconductors topped back in June and July, and we absolutely think some of this is due to tariffs. To put it into perspective, from 2024 to 2025, if these tariffs come into effect, we're tracking a 25% decline in what's called wafer fabrication equipment. This is the equipment that helps to build the chips. For sure, these leaders such as Nvidia, we think will be quite strong next year, but can they carry the entire ETF? We're finding that Nvidia is not strong enough to carry all of that pressure.
Right, and to your point, we've seen that. We've seen where the semis in general got hammered, and Nvidia's gone back to new highs. Also, though, I read or heard this morning, Nvidia's hiring in China. What is it that they must do? They know that this tariff thing could be short-lived?
NVIDIA's story with China is quite interesting because they came under very strict export controls 1 to 2 years ago. These AI chips that have been driving so much of the market were seen as a security threat. Therefore, they've had to reduce the generation down, make them a little less powerful in order to sell them to China. However, if you go back to what Jensen Huang has said about China, there is only one China. And what he's trying to say is when you have that kind of massive population, all of them, middle class or above, right. Quite a few of them middle class or above, it is quite hard to make up for that loss globally.
Willow just seems to have come out of nowhere. I was with a guest yesterday. We were just talking about CPUs being replaced by GPUs, and now there's QPUs, right? I don't know about you, but I think it may have saved Google, or potentially could save Google, because I hardly use it as much as I use it for search and things like that. Do you think, Willow, is it too early to judge whether or not it can live up to the hype, this whole quantum thing in your mind?
I do. Quantum computing is very, very early. You can think of it as autonomous vehicles or what they call high-performance computing, which are the supercomputers that governments use. These are really R&D departments that will take some time before Wall Street sees the profits that Wall Street likes to reward. If I were to guess, I think we are minimum 10 years out before we see a commercialized application for quantum computing.
Have you gotten any later in the party, or are we still, it's always kind of early, isn't it? I mean, it's been a year now, but we're still at 10 p.m. Oh, we started at 9. Okay.
Started at 9, now we're 10 p.m. And look, we think tech stocks are up another 25% over the next year. And I think NASDAQ 25,000 a year from now is something that we're going to start talking about going into the end of next year, early 26.
Yeah, so much of this, there it is, the last line there, so much of this depending on, the numbers are staggering. We talk about them all the time, quarter to quarter. But you think AI CapEx is going to exceed $1 trillion. Why? In 2025, I should say. Yeah, right. Why? Yeah.
It's everything we're seeing. Look, that's why we travel the globe, right? It's trying to understand where the AI CapEx is and what's happening in the market. I think Street's underestimating AI CapEx potential by 30 to 40%. And I think the biggest thing here is the multiplier. For every dollar spent on an Nvidia chip, there's an 8 to 10 multiplier across the rest of tech. That's why you have names like the Messi of AI, Palantir. You have other use cases that are now starting to be in software, Salesforce, front and center. And this is just the beginning. It's get the popcorn out because the rest of tech now sees the benefit of the AI revolution.
Although, Dan, people are still now this morning looking at Adobe's guide, on the back of it, Oracle's guide. Is there going to be some kind of pause or chance to breathe, you think, in early 25?
Yeah, Carl, I think there's definitely chances to breathe. But when I look at sell-offs in Oracle, sell-offs in Adobe, I think you buy these dips because it's where I see this going over the next 12, 18, 24 months. Because what we ultimately, how we view this all playing out is the use cases are now front and center. And the street will sell these off near term, just like we've seen other names sold off over the last year, whether it was Palantir, Tesla, Apple, and others. But now that AI revolution, it's coming, not just to the enterprise, but coming to the consumer, and that's through Cupertino, which is why I think Apple's going to be the first $4 trillion market cap, potentially by the end of this year or early 2025.
Do you buy Meta stock on the fact that Zuckerberg, as we just heard from President-elect Trump this morning, went to visit him in Mar-a-Lago, is giving money to the inaugural campaign? Bezos, he said, is going next week. We know Elon Musk, and it's worked for Tesla. Are these fundamental reasons to buy the stock?
Look, I think there's been early Christmas present, early holiday present when Khan's out at the FTC. I think it changes the dynamics. You can have massive deal making. We think deal making is going to be at more than 50% in tech. And I think who's the strong are going to get stronger. That's going to benefit Meta. It's going to benefit Alphabet, clearly Amazon. And then the one that benefits the most is, I think, Musk and Tesla. it's our view at the end of 2025, we're likely staring what could be a $2 trillion market cap for Tesla on the autonomous vision and deregulation in the Beltway.
Dan Ives remains bullish on the tech sector, predicting significant growth driven by the AI revolution. He forecasts a 25% rise in tech stocks over the next year, with the Nasdaq reaching 25,000 by 2025. Ives believes AI capital expenditures will exceed $1 trillion, boosting growth across various industries. Companies like Apple, Meta, and Tesla stand to benefit, with potential market caps reaching $4 trillion and $2 trillion, respectively, by 2025. While short-term dips may occur, Ives is confident in the long-term prospects of AI, which he sees transforming both enterprise and consumer markets. As AI evolves, leading tech firms are expected to see substantial gains, with the sector continuing its upward trajectory. Do you agree with Dan Ives' outlook on AI and its potential to drive growth in tech? How do you think AI will shape industries outside of technology?